Today I will show a short, very clear example, a sequence of 4 trades on the 1-minute time frames. And there we go. Trade 1 closes in profit and it closes in a profit again. Another $. Total for the sequence $. Hey, I'm Ravi Kumar. I used to be an engineer in Bangalore, living in a constant faster, just a bit more. And that's when I learned one thing: impatience breaks you harder than any mistake. In trading, it shows up perfectly. You see a move you want to make in time, so you enter before confirmation, and then you are surprised your account looks like a roller coaster. Today I will show a short, very clear example, a sequence of 4 trades on the 1-minute time frames, where decisions are made not by feel but by a simple set of conditions: level plus slowdown, reaction plus candle signal. That's it. No mysticism. And one important thing right away: the goal isn't to copy this trade for trade. The goal is for you to understand the logic of reading the market and see exactly why I clicked the button at the moment. If you like this style, clear, practical and explained, subscribe, hit the like and check my Telegram, link in the description. I post entry checklist, a daily trade journal, template and session breakdowns, so you trade by a protocol, not by emotions. Let's go. Alright, we are on the Trade platform. The chart is candlestick, and I'm using candles on purpose because on the 1-minute chart they show the key thing, where sellers lose strength and where buyers start responding. Next, I choose the asset. I open the lens. I pick Australian dollar and Canadian dollar. We have got 85% profitability. That's a solid working number, because with the same entry accuracy, the math is simply more comfortable. Now I set the market tempo. I set the time frame to 1 minute. The 1-minute chart isn't about overthinking. It's about seeing the reaction fast and executing the rules. First trade amount $20. I start with the base side, test the idea first, and only if everything pays out, I can scale up carefully. Now watch price. It's coming to a strong support level, and I don't care about support as a level. I care about how price behaves there. I can see sell-off showing down. The downward pressure isn't as aggressive anymore. Candles aren't pushing price the same speed. And here is an important detail: a small lower wick. A lower wick at this spot is a hint that sellers tried to push lower, but buyers started absorbing it and price got pulled back up. In other words, sellers are losing their grip. Buyers are starting to take initiative. Conditions line up: support level plus slowdown plus lower wick. I enter up. Now I just let it play out on the 1-minute chart. The most dangerous thing is getting twitchy, closing early, second guessing, opening an extra trade out of fear. I don't do that. The entry was logic based, so I let it finish, waiting for the expiry. And there we go. Trade 1 closes in profit. Result plus $17. Next step, I increase the amount to $30. And this part matters. I'm not entering because the last one won. I read the market again and look for the next clean spot. Price moves up and reaches a local high, and now the picture changes. The candle bodies get smaller. The upper wick starts showing up. These are early signs of a potential pullback. The market tried to continue up but got me with selling, and price didn't hold up confidently. At locals high, you often get profit taking and resistance. That's why I decide I enter down with $30. The trade is coming to end. Second last candle, and it closes in a profit again. Another $25. Nice. Next I increase the amount to $50. Now we have a pullback, and the market is showing a familiar picture: instability, short candles forming. A lot of people panic here or start clicking trades out of boredom. But I read it differently. Short candles after a pullback often mean the sellers are losing momentum. If sellers were strong, we would clean confident pushes lower. Instead, the market is stalling, more like it's building energy for another move. So the logic is: pullback happens, sellers can't extend, price starts gathering strength. That's why I enter up with $50. Trade is nearing the finish, and another one closes in profit. Another $42 profit. Next I increase the amount to $100, and again I'm trading the reaction, not the urge to click. Look here, price held the support level and we can see seller pressure fading. The attempts to push down aren't as convincing as anymore. And now we get something that reads very clearly on the 1 minute chart. A strong bullish candle. This isn't a magical signal, it's just a fact. Buyers finally showed real strength. The candle closes firmly up, meaning the market is actually ready to move. That's why I enter up with $100, waiting for the close. And the trade closes in profit again, $85. Total for the sequence, $370. Trading isn't guessing, it's the ability to wait, read the market and act at the right moment. That's the core of consistent trading. Remember, the market respects patience, and confidence always comes from experience and discipline. Let's log in what you just saw. There was no secret and no insider info, just a simple order. Pick a clear asset conditions, Australian dollar and Canadian dollars, 85% M1. Number 2, wait for the level. Number 3, read the reaction, slow down, weak, smaller bodies, a strong candle. Number 4, enter only when the market confirms the idea. Number 5, and don't confuse discipline with gambling. I didn't get to this overnight. I needed time to stop rushing to the market the same way I used to rush office deadlines. But once you learn to wait for the confirmation, trading becomes manageable instead of emotional. If you want my 1 minute entry checklist and a template for logging trades and summarizing your day, check my Telegram link in the description. And don't forget subscribing and hitting like help push these videos so we do more real practice and less motivational fairy tales. See you in the next breakdown.